welcome to the Konvergent video series for the week of May 5th. I hope you all remain healthy and safe as many of these coronavirus shutdowns continue now in May. So with that, I'm just going to jump right into the data. So last week we saw the markets down about 0.2%. Quite a roller coaster ride to get there. The markets were up quite a bit early in the week and then down obviously quite a bit at the end of the week to finish pretty much flat for the week. The biggest headlines were GDP and unemployment. The first quarter GDP number was released at negative 4.8% GDP growth for the first quarter. And that's a big number. But the most concerning part of that for me is that the March component of that is only a 1/9 weighting to the overall formula. And with the economy basically shut down for only the last 2 or 3 weeks of March, we still saw such a big negative number for the quarter. And if we think about Q2, April is going to be the largest weighting since it's the first month of the quarter, and the economy was effectively shut down for pretty much the entire month across the country. And now it looks like many states, including Washington, where I'm at, are going to be shut down for the most part even through May. And so many people are forecasting a number of something like negative 20, maybe even negative 30% or closer, or higher, for GDP in the second quarter, which are numbers we haven't really seen since the Great Depression. So a lot of concerns coming with GDP. Related to that right now, obviously, is unemployment. We saw the latest unemployment figures released last Thursday, and we saw another 3.8 million new claims for unemployment, which brings the total over the last 6 weeks to over 30 million. Which effectively has wiped out all of the job growth we've seen over the last 10 years. So this definitely has us concerned about where things might be going with that much economic damage happening. Some of the other numbers we're looking at right now that have been released recently for March, and also hopefully we'll get some of this data for April soon, but consumer spending, which is the bottom part of the chart you're looking at now, was down over 7% for March. And the big number that you could look at to kind of relate to all that is auto sales were down 50% in March alone. And so numbers we haven't really seen since 2008 and 2009. And so when we start to see consumer spending drop, that leads to other concerns in the economic data, especially around bankruptcies. Historically, bankruptcies have pretty closely followed or correlated to unemployment. And obviously, we've seen a big jump in unemployment. And so we're worried that we'll start to see some data that will lead to increase in defaults, and we're starting to see that. So in a recent survey of commercial real estate or commercial rent payers, so far the data is showing that over 65% of them plan to pay 50% or less, and many of them planning to pay nothing on their rent in May, which is leading to an uptick in defaults. So the chart you're looking at now is showing that we're starting to see a large uptick in defaults in the hospitality space as well as the retail space. So some good news to help combat some of this is that as the government has been pumping a lot of money into the system over the last number of months, which has increased, which has helped the market bounce back a little bit. One of the things they've done recently is added new funding to the Paycheck Protection Program, which is initially was a $350 billion program to provide potentially forgivable loans to small businesses. And the first round of funding, a lot of those loans seem to have gone to larger businesses, and a lot of the smaller businesses that need it the most seem to have not have been able to get their loan processed. Well, the second round of funding, which was another $310 billion in the last week of that program starting, saw 2.2 million loans given out with an average loan size of about 79,000, which is much smaller than the average loan size of the first round, which indicates that that money is getting to smaller businesses that need it the most. So, hopefully that will help stem the tide. Hopefully, as some of these economies open up around the country, we'll start to see economic activity begin to pick up, which can offset some of the damage that's been done in March and April so far. But we're still cautious. Until we start to see the data indicating that we're seeing a big uptick in activity, we're likely to remain, where we're at now, which, like I said, is that cautious state with our investment philosophy. So, with that, I hope you all have a great week. Please check out our newsletter that will be coming out shortly as well, which is going to have all of the information from our recent blog posts, our recent happy hour series, as well as any videos you might have missed in the last couple of weeks. So hope you're well, and we'll talk to you soon.